Hey guys, I'm Big Mike, and like always, I'd like to thank you for being here today. Today we have Kevin Davey back for a webinar. This time the webinar is titled Battle of the Bots, and the webinar is going to cover what exactly a bot is, some keys with making a bot work, discussion of the Battle of the Bots contest, which is a contest that's been running for several years on BMT, a detailed look at the recent bots that have been submitted by users to the contest thread. Some of the recent winners of Battle of the Bots have interviewed with Kevin, and Kevin wants to talk about creating a group think bot as part of a future event. Also, at the end of the webinar today, Kevin's going to be giving away 3 copies of his book titled Building Winning Algorithmic Trading Systems, A Trader's Journey from Data Mining to Monte Carlo Simulation to Live Trading. Also, I highly encourage you to check out Kevin's other webinars on BMT. There have been quite a few, and they have all been excellent. You can find them on the YouTube channel or the BMT webinar archives page. Okay, guys, in order to win a copy of the autographed book, I'm going to be asking for your BMT username, so please have that ready to go, and I will get in touch with you on the forum afterwards to get your mailing address and etc. The webinar is being recorded like always, and I'll post the recording on our YouTube channel sometime tomorrow. If you're watching the recording at a later date and you like it, please do us a favor and give us a thumbs up. It does help us out. Kevin has asked that we hold the questions until the end of the presentation, so just wait for him to wrap things up and then you can start asking your questions. Okay, with that, I'm going to turn things over to Kevin right now. Okay, Kevin, I've given you control. You should be able to share your screen.
Okay. Hopefully everyone can hear me.
Yep, hear you and see it. It looks good. Thanks, Kevin.
All right. All right. Well, thanks, Mike. And hey, welcome everyone. Thank you for taking the time out today to listen to me talk about the Battle of the Bots, which is a contest that I've been moderating on Big Mike Trading. It's been going on for a couple of years, and I've got involved with it probably about 6 months ago. So when I talk about it and hopefully stir up some interest in it and get some people to submit some bots. So, all right, let's get started. So what we'll do is, I'm going to go through and talk a lot of different things about the battle, and then we'll go on to questions and answers, and at the very end we'll do a book giveaway. So I want to thank Big Mike for sponsoring today's event, obviously, and he's probably the reason. It's definitely the reason we're all here and why we even have this contest, so big thanks to Big Mike. And I also want to thank some of the other contest sponsors at NinjaTrader, who basically gave us a license to run it on a server, and it runs on a speedy trading server, which is Sam 028 user. It's his trading server service, so big thank you to him too, and to NinjaTrader. So just in case I don't get to some of the questions, you feel free to send me a private message on Big Mike Trading. I'm Kevin K. Dog, or email me, kdavey@kgtradingsystems.com, or just post it in the thread for the Battle of the Bots. I'm pretty easy to get a hold of, and I'm pretty good at answering all kinds of questions. So don't think your question is too simple or too silly to ask. The only questions like that are the ones you don't ask. So you saw this disclaimer beforehand. I won't go over it other than say everything I'm going to be showing you, treat it as hypothetical. Real live results might not be the same as what you see here. And I don't know what the weather's like for you. I'm sure for Big Mike it's nice and sunny down in Ecuador, but this was the scene that I saw a couple days ago, and it's I think it's about 10 degrees right now, but it's not as snowy. Some of the snow's melted, but it's pretty bad. I'm in Cleveland, Ohio, on the shores of Lake Erie, so it's you know what? It's wintertime in Ohio. What do you expect? So if you don't like snow, you shouldn't be living here. So luckily, I like snow. The giveaway at the end is going to be this. I'm going to give away 3 copies of my book, Building Algorithmic Trading Systems. And I just wanted to mention real quick that Trader Planet, which is a trading website, traderplanet.com, just awarded this book as a Trading Book of the Year for 2014. So I'm pretty happy about that. It makes all the long nights of writing kind of worth it when somebody like the Trader Planet recognizes it. But we'll be giving away 3 copies at the end. All right, so let's just jump right into this and talk about what a bot is, some of the keys to making it work, and then we'll talk about the Battle of the Bot contest and take a look at some of the recent bots that have won. And I was able to interview each of the recent winners, and they gave some really excellent insight into how they created a bot, and so hopefully that'll help everybody who's thinking about it. And then I'm going to talk about creating a group think bot, and I'll get more information about that later, but there'll basically be a little survey that I'm going to ask you to take, and then I'm going to try to put together a bot that does what the group wants it to do, and then we'll see how it works. Okay, so what is a bot? You know, you've probably heard of bot trading, algorithmic trading, rule-based trading, mechanical trading, black box. You've heard of all these things, and basically, at least the way I look at it, all of them are the same. What you're doing is creating a set of rules, and it's usually in computer code, but a set of rules that dictates your trading decisions. Now, it doesn't have to be automated. It doesn't have to be programmed on a computer. You know, you could do it by hand. I remember 25 years ago or so, I was doing it by hand, a moving average crossover system. And so, but the rules were set, and I just executed them. So that could be a bot. So a bot's just basically anything that gives you rules for what to do. And the idea is you don't want to use any discretion. You don't want to take a trade today but not tomorrow because it doesn't feel good or something like that. You just rigidly take the trades. And there's a reason why. You know, if you look at discretionary trading, I'd say the rules are flexible. And the reason I say that is because if you are a discretionary trader with rigid rules that you always use, chances are you can probably program it and turn it into a bot. You know, and there's something to be said about discretion and using discretion. You know, there's a lot of traders out there who trade that way, and I don't want to say that's not a good way to do it, but the reality is more and more traders are looking at this systematic kind of algorithmic type trading. I think a lot of the major players in hedge funds and that kind of thing, there's not as many discretionary traders as there used to be. A lot more of it's computerized. And I happen to think that's a good thing, but you know, if you have success with your discretionary system, then by all means, you know, continue to use it. And of course, there's something in between a pure discretionary approach and a pure bot or a black box, and that's what's called a gray box, which, you know, has rules, but it also has a lot of discretion built in, and so you can be anywhere on that spectrum. But you know, a lot of people have a lot of misconceptions about these algorithms about bots. A lot of people tend to think that they've got to be used high frequency. You know, you got to have 50 trades a day or 100 trades a day. Well, I think what people think is, hey, if I want to be scalping, I got to take that many trades, okay, and so then I want it computerized, but it doesn't necessarily have to be that way. You can easily write an algorithm that trades once a week or once a month. You know, it doesn't have to be high frequency trading. The next thing, people have a lot of misconception about emotion, and they think running a bot, running an algorithm is going to take away all the emotion of trading. And I can tell you it absolutely does not. The emotion's still there. It's just going to be different. It's not going to be should I take this trade or not? Because now you're turning it over to the computer to take the trade. But that kind of question, when you're doing this rule-based trading, will become, should I turn the system off? Should I keep it on? What should I do? That kind of thing. So there's still a lot of emotion with bots. Ideally, you want to get to the point where you're just executing your bots and you don't care, but the reality is for most people that's pretty hard. Another myth is they're not going to work in the long run because markets are constantly changing. And you know, that's probably true to an extent, but it's not a requirement, or it's not a, you know, written in stone kind of thing. Some bots can work for years and years. So I have one system I trade that I've been trading for 5 years, haven't made any changes to it in 5 years, and it's still performing really well. But at the same time, I've had systems that I've traded for a couple months and the market changed or whatever happened and I had to abandon it. So I've seen both sides of the coin there. A lot of people tend to think that running a bot is scary, that it can just go haywire, you know, and start placing, you know, hundreds of orders, and all of a sudden you run out of margin. And that can be true. You know, you've seen and you've probably heard of some of the major trading players. I believe Knight Capital, they turned on one of their algorithms and basically they almost blew up their company, or they did blow up their company in a matter of minutes. So there can be unexpected things, but that's where proper testing of a bot and an algorithm, you know, come into play. And I think with a lot of the retail software, you know, the TradeStation, the Ninja, the multi-chart software that's out there, it's a little harder to do. They have some built-in things that prevent this kind of haywire type of thing. But you know, it's something to at least think about. But I certainly wouldn't use that as a reason not to trade a bot. I think those things you can easily get over, and you can have a pretty steady, reliable bot that if your internet goes down and then comes back up, that things don't get squirrely on you. You know, you can build all that stuff or use what's already in the software. The final myth about the bot that I think is definitely something you want to avoid. A lot of people think you can run it unattended, and you know, this was probably more popular a few years ago, where you heard of these MetaTrader expert advisors for Forex, and you know, there were all these internet sites just devoted to, hey, you download this bot and you put it in your system, in your software, and you can trade day and night, and you can be on the beach drinking a margarita and you'll be making money. Well, one, that's definitely not true for the making money part, because it's a lot harder than that. But the other part of it is you really don't want to let any kind of algorithm run wild without you attending to it. And attending can mean looking at it every couple hours, depending on your time frequency. You know, I look at my systems that I trade a couple times a day, and usually I'm doing other stuff, but I'm in front of the computer. So if something goes wrong, if there's a position mismatch or something, I can check it. Obviously overnight there's sometimes issues pop up, but the big thing is I don't let things run for days or weeks without checking it. That's where you get into trouble, and I think a lot of people think they can just run it and just let it go. Somebody's got to be there. Somebody's got to be on the watching end just to make sure things are running smoothly. So a good example, even if you have it with brokers, I had a system I was trading with a broker, and lo and behold, I noticed one day a trade wasn't made, and as it turned out, the broker system went down sometime in the morning, and when they brought it back up, my system wasn't activated, so I missed this trade. And that's a good case in point of how things can just, you know, go wrong when you're not attending to it. So that's an important thing to realize too with the bots. It's not set it and forget it completely. Okay, so real simple. What is a bot? You know, we'll start really at the basics. It's got to have a rule for entry. It's got to have a rule for exit, and it might have rules for position sizing. So here's an example. This is a NinjaTrader. It looks like if the close is greater than the close X bars ago, and the RSI, it's probably an RSI, is below a certain value, you enter the next bar, you go long. On the short side, you do the exact opposite, and it's using 100 minus the RSI value because everything's 0 to 100. That's, you know, a bot doesn't have to be any more complicated than that. You've got two conditions there for long entry, two conditions for short entry. It's symmetrical, which is always nice. You know, you don't want to develop a bot that only goes long, because they'll look great with the stock market indices right now, but what happens when we hit a bear market? Your system's still trying to go long. So I always like to have it symmetrical. You know, some people don't, so that's another key point I should probably mention is, you know, these are I'm telling you the way I do some things, but there's always a different school of thought out there, and you know, some people like having a lot more rules. You know, I guess that's fine if it works for them, but I like to keep it simple, and this is a good example of a system that I would probably try to develop. And that, you know, that's the flip side. You can have thousands of conditions, rules, inputs. You know, the sky's the limit. You could make it so the computer code is more complicated than what they used for the moon landings. The basic rule of thumb is if you can program it, you could make a bot out of it. The question then becomes, is complicated better? You know, do you really get anything out of making it more complicated? I tend to think not, but a lot of people like complicated bots, complicated algorithms. Certainly a lot of the investment banks, you know, they have PhDs on their staff, and they're doing more complicated things, but I tend to go the simple route. You'll see these bots that have won the contest tend to go the simple route. But then again, I'm not playing necessarily against the investment banks, so you might be able to get by with simpler stuff. You know, it depends on who you're trying to compete against. But certainly if you were going to try a high-frequency scalping bot, it would probably be more complicated. Okay, so what are some of the keys to creating a bot? I really think there's 4 big steps. You know, obviously you got to start with an idea. Then you got to test it and evaluate it, and you got to do it properly. You can't just go in and optimize everything up until yesterday and then start trading it tomorrow. Unfortunately, that's the way most retail trading software kind of leads you. You know, they encourage optimization, and they encourage some bad habits. So that's something you got to watch out for. You want to evaluate it with out-of-sample data. I do walk-forward analysis, which is a type of out-of-sample, but I definitely think you want to do out-of-sample analysis to verify what you've got. And then at the end, you have to have confidence to trade it, because all the work in the world isn't going to work if you're afraid to pull the trigger. And it's kind of a catch-22, because you're not going to have confidence to trade it until you are reasonably certain that what you're going to be trading will make money. But you're never going to get to that point unless you have confidence to trade it in the first place. So the nice thing is once you start trading it and hopefully make some money with it, then it kind of validates your process, and then you can say, okay, well, I'm going to keep doing this process again. And for me, it's all about the process. And I've shown this before at some of the Big Mike webinars, so there's really nothing new here, but I have a step-by-step process that I go through to build a strategy. And I just use this over and over again, and it's just a process, but it's a process that I know works because I've used it for so long, and it gives me reliable strategies I have confidence in trading, and I think that's a big key. So to create a bot, you've really, you start out with the idea, and then you go through some testing and some validation, and then you turn it live. And that's simple. Sounds real simple, and obviously the devil's in the details, as they say, but that's basically what it takes to create a bot. And again, I've mentioned the confidence thing, but that is going to be big because every bot is going to have drawdowns. It's going to have periods where it underperforms, and chances are, at least it seems like for me, as soon as I start trading a system live, it almost always starts out with a drawdown. Maybe it's just me, but I know it happens to some other people, but it just seems to be the way it is. And if you don't have confidence in what you're doing, that's where the emotions and the psychology come into play. Where people, that's why I disagree with people who say, hey, you trade algorithms, you don't have to worry about your emotions. Well, yeah, you do, because when things go bad, you lose confidence, and that's when you really need it. Okay, so how do you get that confidence? Well, one way is run it in this contest. All you have to do is create something in Ninja and post it on the Battle of the Bots thread, and I'll put it in a chart on NinjaTrader, and we'll run it, and we'll see what it does. But that's a pretty cheap way if you don't have Ninja to run it yourself. But it's an out-of-sample test because it's using live data. I mean, it's a pretty good indication of if your bot is any good or not. It doesn't mean it'll continue being good, but certainly over-optimized, curve-fitted bots just won't hold up in real time. And I'm sure all of you have seen that in any kind of trading you've done if you've done some system trading, because those are the easy ones to create. And then, the other part is if you submit a bot to this contest, you get some feedback from other members. People ask about your bot. Well, why does it do this, or why does it do that? And I think we're probably close to like a tipping point now with that thread where if we have a few more bots enter, we'll get a little more participation, then all of a sudden there'll be a lot of activity going on with a lot of give and take and people sharing ideas. When there's only a few people doing it, that doesn't happen. But we're close. I think we're close to that. So that's why I'd encourage you to do it. You can also win some prizes. Mike gives away gift cards every once in a while. I've been giving away a copy of my book. And then plus you have some bragging rights. It's pretty cool that these people have won with some pretty good bots. And they can say, hey, I was a winner. So something to think about. It's one way to test your bot for free, evaluate it, and if you want people to look at it, you can do that. We make it so that everything's open. So if somebody wanted to take your code and steal it and go run it with a hedge fund, they could. But we're doing that because of the educational value that you get. I mean, anybody could submit this hidden black box bot and show how great they are, but how would it help the rest of us? Well, it wouldn't. It doesn't help anybody unless you get to see what the code is and understand how it works, and then you can start creating your own, because that's the whole idea. As I mentioned, and this is important, no bot is perfect. And you shouldn't expect it to be perfect. You know, I see a lot of people who either message me, or I see it on the Big Mike forums where, you know, people will say, well, hey, look at this strategy report and what can I do to make it better? And people get hung up on creating historical backtests that just look better and better and better and better. And they get caught in this loop of continually trying to improve the backtest, and that isn't going to get you where you want to go. Trust me. It's probably the exact opposite. It will get you exactly where you don't want to go when you keep optimizing and adding filters. A bot doesn't have to be perfect. An algorithm doesn't have to be perfect. It's going to have drawdowns, and that's okay. Because if you aim for perfection, you're usually going to get poor results. And it's because you're just fitting to the past data, and everybody knows the past data isn't going to be what the future data is. So again, that's why I like the simple bots, because they tend to just pick up on some little edges that might exist in the market and use those. They don't try to catch everything, and a lot of times they miss things. So keep that in mind with any kind of bot that you create. Okay, so with that, I want to take a look at 3 recent winners in the contest. And that's Quantismo, Bounty, and Dynoweb. There are 3 members who all won recently. And so what I want to do is kind of go over their bots a little bit, talk about it, and then I asked them all some questions, and they were all gracious enough to answer and give their answers to my questions. And so we'll talk a little bit about that. All right, so in October, Quantismo won. He had a Euro 133 tick chart system. It was a martingale sizing bot. So basically, if he lost, he doubled his size, and if he lost again, he doubled his size. And it only traded short. And we'll get to in a little bit some of the good things and bad things about each of these bots, at least in my opinion. But that's what he had. And if you look at the code, I'm not going to go through all this code, but I just want to give you a flavor for, hey, how complicated are these things? He basically had an entry condition. He said if the previous high is greater than the previous open, and the low is less than the open, and the high is above a Bollinger Band, and the high 1 bar going, and the current high is above, looks like a regression channel. Then there's some position sizing stuff, and then at the bottom it enters short. So he's got 1, 2, 3, 4 conditions that he's looking for, and then he's entering short. The grand scheme of things, it's pretty simple. You know, it's not terribly complicated. I think where his bot might have gotten complicated is probably in the figuring out the position size, you know, based on this martingale. So pretty simple. And then the average, he's basically, if he's having a regression channel across the low, he's exiting, and yeah, there's a couple different conditions for that. And then that's his exit. Pretty simple, right? Where his bot might get complicated, like I said, is the position sizing. I didn't want to include all this code. You can go to the thread and see all the code. I just want to have him explain what he did. And like I said, he's trading 1 contract, then doubles up, and he gets to the point where he might go to 8 contracts. So in the grand scheme of things, that might be a little risky for a lot of us, but it tends to work with this bot. So here's his performance. Now he won in October, so that was probably this first part of the curve where you can see it was really nice. Then he had a drawdown, went pretty good, and looks like in January he was pretty flat. But you know, all things considered, if you started with a $50,000 account, you know, he ended up 4 months later at like 77,000. So you know, that's pretty good performance. A lot of us would definitely like that. But again, it's not perfect. it only trades short. And anybody who looks at the euro knows, well, the euro's been in a nice downtrend for a while, especially in the last few months. It's just been going down and down. So what will happen when it turns up? How will this bot do? Well, if and when the euro turns around, it might not be for a while, just with all this Greece stuff and all that, we'll probably see though, and we'll see if it can survive in a bull market, if a short-only strategy can, and it might have trouble then. So, in the martingale approach, that can kind of be that can definitely be kind of gut-wrenching. Just a loser, and then you double, and then you double again, and you double again. That can be kind of scary. But again, no bot is perfect, and every bot is going to have its weak points. But even with those weak points, it's performed pretty well. So, pretty nice. Okay, so here's some questions that I asked Quantismo, and I asked the same questions of everybody, and so I'm just going to briefly go over their answers. And what you'll start to see after we look at everybody, you'll start to see some themes develop. He doesn't run this with real money, but it's a similar code that he does, or he did run with real money. Okay. How did he come up with the idea? Because people are always fascinated with the ideas. Well, what he said was he looked at the 133 tick chart and just kind of looked for what would be what he thought were high probability entries. And he probably put some indicators up and kind of looked around, and that's what he came up with. So I would say he took a chart and took his market knowledge and tried to apply it, and that's how he came up with his entry. He just didn't randomly pick 10 different indicators until something stuck and something worked. He actually had a process for it. What kind of testing he did, there's a lot of words here, so I'll just summarize it. Looks like he likes testing 2 to 5 years, and he wants to see hundreds or thousands of trades, and he wants to check for its robustness, and then a lot of times he'll let it sit for a while and then go back and look at it. These are pretty good principles that he's doing. And how many has he written that he's considered successful in the past year? He says he's written at least 2, but this is interesting, and this is why I included it, is that Swiss franc black swan issue, that got him to thinking that robustness should account for those kind of black swans. And yeah, I think he's kind of changed his view of success, and he's saying, hey, if you want to be successful with the bot, you got to watch out for those black swans, or you somehow got to prevent them. That is a pretty lofty goal. I hope he gets there. I don't know if most of us could ever get there, because that's tough. Because a black swan, by definition, you don't even know it's coming. Okay, so on to our next winner. Now, our next winner was Bounty, and he had a system called Volume Spike. It traded crude oil on 1-minute charts, and he was the winner in November and December. So he was a 2-month winner. And again, here's a simple entry. Now, this is TradeStation language, so a lot of you might not be familiar with it, but basically he's saying if the volume today is less than the volume yesterday or the previous bar, in his case he's using 1-minute bar, so if the volume of this bar is less than the volume of the last bar and it's above a certain threshold, and I haven't made too many entries today, he's got a maximum there, then buy the next bar at the highest high on a stop, sell on the lowest low on the last 2 bars. So he's looking for a real short-term breakout of the 1-minute chart, and he's buying on a stop either way. And then exiting, he's just going a time-based exit, and if it's around the closing time that he defined, he's just exiting. So pretty simple. Now, you saw Quantismo did some position sizing. Bounty just did single contract for a $50,000 account. Now, a lot of people might say, well, that's pretty light. You know, I like to use more leverage. Well, don't forget leverage is a double-edged sword. So, you know, he could easily trade this with 10 contracts, but the drawdowns might wipe him out. And so I would say he's probably being a little bit on the conservative side with one contract per 50K account. But, you know, first of all, I think you want to be prudent and you don't want to overtrade. You don't want to take on too much leverage. You want to be a little conservative there. So as you can see, it kind of worked out really well for him. He had pretty good performance in October, and then in November and December he did pretty good, and then he got hit with a drawdown. This is probably when crude oil was kind of falling a bunch. But overall, he's gone from 50,000 to 75,000 in that 4-month period, so about the same as what Quantismo did. And he just had a couple significant drawdowns. But you know, all things considered, this was for the simplicity of it, was a really good performing bot. Again, no bot's perfect, and I don't mean to discredit these bots or anything by saying, hey, they're not perfect, and showing you what I think's wrong with them. Trust me, you could take any one of my systems that I trade, and you could find things wrong with it, things that you're like, oh, this is idiotic. What are you doing this for? So this is just, I just want to show you this just to say you don't have to get perfection. And you know, yes, you give up by not having perfection, but you also get a lot by having things simple. So in this case, Bounty didn't have a stop loss. So if you get a big intraday price shock, that could prove pretty deadly to the system. And you know, the whole concept of buying breakouts, you could say, well, wow, most breakouts fail. I've heard like 80% fail. So maybe your winning percentage isn't as great as you'd hope. But the flip side to that is, hey, the equity curve is the equity curve, and if you win 20% of the time to get that curve, or if you win 90% of the time, in the end, excuse me, in the end, does it really matter? I think the important thing is the equity curve and the amount of risk you take and the drawdowns you get for that. So in that respect, I would say you can't really argue with the success that bots had. Okay, so 4 questions for Bounty. Do you run your bot with real money? No. How'd you come up with the idea? He likes breakout triggers. You know, he was worried about the lag with other indicators. That's a great reason. Use breakout triggers. And then he wanted to incorporate volume. So again, he just didn't randomly come up with it. He was thinking about the market and thinking about what he liked and what he thought might work. That's a great way to develop the system. It's probably the best way because it incorporates what he likes, and it also incorporates some market principles in there. What kind of testing he did? He ran it from 2006 to 9, and then he ran it out of sample 2010 and 2011. So he did both. He did some optimization, but he also did out of sample. Again, this is a very good practice. And in the past year, he's written 3 to 5 successful bots. So you know, he's written a handful of bots that he thinks are about as good as this Bounty bot. Okay, moving on. Dynoweb. He's the last bot winner. He was the winner in January, and he's also trading crude oil on a 1-minute chart, but he's doing it differently than Bounty. And his code's a lot more complicated, and so I'm not showing it, but basically what he's doing is a breakout based on opening range is what he's looking at. That's probably the simplest way to explain it. In the exits, he's using multiple different types of exits. Excuse me. So You know, I don't have time to get in all the detail for that, but again, just go and download his bot from the thread and take a look at it, tear it apart, look at what he's doing. You probably will find with all these bots some interesting things that you hadn't thought of doing before. Now he's using 5 contracts for a 50K account, although he does change the amount of contracts when he has a certain type of reversal. So he's trading with a little more than Bounty is. And you can see his performance the first couple months was okay. I mean, he was profitable. He had some drawdowns, and then ended up around 70,000 from back in October. But you can see the month of January, he was pretty much almost always up. So it did really well in January. And hopefully, you know, the contest only runs for 1 month. But the reason I wanted to show you 4 months is just to show you that 1 month of performance doesn't say, hey, this is the greatest thing ever, you should trade it with all your money. 4 months doesn't really show you that. You have to look at years of performance to really get a really good picture of it. But you know, a lot of people will look at one chart and maybe come up with a rule or two and then start trading it because, oh, well, it worked on this chart. Hopefully you realize that that's not a good way to go. It's not a good practice, and especially if you're creating any kind of algorithm, what's going to happen is those kind of ideas fade away quickly, and you want to look for something that lasts over a good period of out of sample, you know, a couple of years or walk forward of 10 years, that kind of thing. So on the downside to Dynoweb's bot, it's a little more complicated, although it's based on a simple idea. That the code got pretty complicated, so you know, it works, but for my taste, it was probably a little too complicated. But you know, it might be simple for what Dyno does, and you know, I've seen some of the stuff he creates, and he creates some pretty neat things. So, and it has performed pretty well, so you know, who am I to say? 5 contracts per 50K, you know, that might be up there for a lot of people's risk tolerance, but you know, he's been able to handle it pretty well without severe drawdowns. And you know, obviously it had a great January, and that's why he won the contest. But you know, Dyno, I asked him if he ran it with real money, and said maybe I'm just chicken. And you know, that is great, because I'm thinking, well, here you've created quite a few different bots, and you know, this one's working pretty good. And maybe the issue is he just has to see more good performance before he feels confidence, and that kind of goes back to that confidence issue I was talking about. But it looks like, you know, what most of these bot guys, all of them really, do is they have a pretty good process in place, and that hopefully will give them the confidence to be trading live. And again, he was looking for a specific thing, a breakout of consolidation. Again, a simple idea, something that he saw that he liked. And Dyno brings up a couple interesting things with testing and evaluation. He uses non-optimized historical data. He also runs it live to validate it, and he tries not to over-tune it, to over-optimize it. Great things right there. I mean, you know, you talk about best practices, Dyno's using them right there. And how many bots? He's written about 30 or 40 of them, but very few of them do well against non-optimized data. So I don't know what very few is, but let's just say it's 5. That kind of tells you what you're up against, and that's consistent with what I've seen in my own trading in development. Not many bots can pass the tests you put at it and run good with out of sample data, this non-optimized data. So hopefully you get an idea if you put all the winners together. what kind of lessons can you get out of this? Because that's what it comes down to. You know, what can you learn from these bots? Well, one, the simple bots can do pretty well. You know, we've seen that where all these were pretty simple. I mean, you know, they're not terribly complicated ideas. Even Dynos, that probably was the most definitely the most complicated code, still was just based on an opening range breakout. That's pretty simple. They didn't randomly pick things. You know, they actually had thinking about what they wanted to do and how they were going to do it. I think that's key. They all included some kind of out-of-sample testing. And again, I can't stress that one enough. So many people don't do it. They just optimize it up until yesterday, start trading it tomorrow. Not a good way to go. And these guys prove it through the way their bots have behaved in out-of-sample. And they all agree it's pretty hard to make bots, and a handful a year is probably pretty good. Now, obviously, if you're doing this full time, you can probably create a bunch more, but you know, there's probably people who work on it part-time who could go a year or more without creating a good bot. You just never know. The only words of wisdom I can impart is that it seems like once you create a few, for whatever reason, it becomes easier to create future ones. Whether it's you become more comfortable with the process or better ideas come into your head, I don't know, but that first one's always the toughest one, and then it gets easier. So that's what some of the winners have had to say. These are great lessons here, and you know, if you take a screenshot of this or write these down, these are probably the keys to a good bot. Simple, built around an idea, includes out-of-sample testing, and you know, you don't look to create 10 a day. You realize it's going to be kind of tough. Okay, well, this is just out of curiosity. I forget who, one of the winners had mentioned, hey, what would happen if you traded all three of the bots together? Here's the performance of all three of them. You know, the tough part about this is, well, we already knew they were winners, and now we're putting them together. It's not really realistic, but I would think after we came up with this idea, so maybe February's performance, it'll be interesting to see what they do. Okay, I'm going to get to your questions in a minute, and the last thing I wanted to talk about is, you know, we've talked a lot about bots. I actually want to create one based on what people who are attending think. Now I'm going to have to write it in TradeStation because I'm not a good with Ninja person, but I'll post it up on the thread. Maybe somebody can convert it to Ninja, and then we can run it as a contest bot. But we're going to create a simple bot just so everybody gets an idea of what a bot looks like, and everybody will be able to see it. And then you can take it and build on it. And we have a couple people. We have a Rich and a Rick, both volunteering to convert it, so thanks. And hopefully I'll have this up in a couple weeks up on the thread. But there's a survey, and I'll give you the link in a second. But basically it's going to be 5 questions. The market to trade, whether we want intraday or a swing type system, what kind of entry, what kind of exit, and how many trades a day. And whatever the group comes up with, I'll try to create a bot that meets that. And probably what I'll do is I'll try to make it interactive on the thread where I throw out some ideas and people give some input. So it'll be kind of interesting because it'll kind of be a group effort. And here's the survey. And so, whoops, sorry about that. Sorry about that. Whoops. Here, I will copy this and I will paste this in the chat box. And if I can paste, and then if you just take that survey, if you get a chance, it's 5 questions. That would help us out, and whatever the group says, that's what I'll do as far as creating a bot. So, okay, now I have to go back to where it was. Sorry about this. And so I'm just whipping through these real quick. So that's the actual bot building idea, this groupthink bot, and there'll be more information on the thread. And maybe what we'll do in a month or so is we'll follow it up with another webinar where we can talk about it, or maybe a couple months down the road where we can go over the results. I guess we'll see. Okay, so with that, before we get to the book thing, I'll turn it over to some questions. There's a bunch of questions in there. I'll start going through them. If you have questions now, please just enter them, and I can try to answer them. And then after that, we will actually get to the book giveaway. Okay, Michael's asking, what computer language do you use, and is there community support for creating code for it? The answer is yes to is there community support, and that's for any of the major languages. I think the major testing platforms, retail testing platforms, are probably TradeStation, NinjaTrader, and MultiCharts. And if you get any one of those, you can do just about anything that your heart desires with testing, and they all have great communities, great support. You know, I've personally used Ninja. I don't program too much in Ninja, but I've used their support for things, and I'm more of a TradeStation person because I've been doing it for 10 years with TradeStation. I haven't used MultiCharts, but I've heard their support's good. But Ninja support is tremendous, and TradeStation support's really good too. So there's definitely community here. Big Mike Trading, there's a ton of Ninja people on it. So if you ever have questions regarding Ninja, just ask away there. Okay, Kat is asking, when I test an idea, I sometimes find it performs well in one direction much better and hardly breaks even in the other. Do you find that too? How do you deal with that? Well, there's a couple things there. Yes, I do see that sometimes, and a lot of that, if you look at the data, the market data, a lot of that might be due to the actual trend of the market. So maybe stock indices, you'll see they work good on the long side, not as good on the short side. So, but what you have to be careful about is you don't want to tailor it to one direction or another. You want to try to be balanced. So for example, if I'm creating a system and most of my trades are long trades, but very few are short, I don't like that. I try to get it more balanced, because eventually what comes up must come down, at least to a degree. Maybe not in the stock market as much, because the long-term trend's probably going to be up. But you want to kind of watch out for that. Will this be recorded? Lewis is asking. Yeah, Big Mike's taking care of that. What is the risk of ruin for these bots? Peter's asking. I have not looked at that, and so that's maybe something the developers of the bots might be able to address. Neil's saying, kind of new to this, what do you mean by optimized data? So the simplest way to think about it, Neil, is if you were running a simple breakout and you want to say, I want to, once I hit an X bar high, the 10-day high, 20-day high, I'm going to buy. Well, optimizing it, you'd be looking at 10-day, 11-day, 12-day, 13, and then picking the best one. And usually that's not a good thing to do, because that's just on past data and there's no guarantee, and probably it won't work good going forward. So you can over-optimize, and that's kind of what we're talking about here. Rick is asking, how does walk-forward testing help? Walk-forward testing is really just doing multiple out-of-sample sets of data. And the other nice thing about it is you can change your parameters might change over time. So it kind of adapts to the market, one, and two, it has out-of-sample data where you haven't tested it. So that's why that's good. Okay, let's see. Peter's asking, what are your thoughts on rule-based versus machine learning, like the presentation last week? I'm assuming you're talking about the neural network. I did not see that. I think in any kind of computerized development and that kind of thing, you just got to watch out for systems that are over-optimized or fit too much to the data. And if you can come up with a process that proves itself not to create overfit systems, then I think it's good. And then Peter, as a follow-up, on average, do you find the bot results outperform the best discretionary systems, or do discretionary non-algo traders still have an edge? I think where the bot people really have it isn't in any one system, because I think a good discretionary trader can beat those. But when you're trading 20 or 30 different strategies, so like right now I trade about 50 strategies. When you do that, you get a lot of diversification effect, and Big Mike's talked a lot about it. The diversification, I think, is really key with this, and that's where you might be able to outperform a discretionary trader. Neil's asking, must we use Ninja to enter the battle? Yes, right now. TradeStation was participating. They've dropped out at least for a while, so we need Ninja. And Tim had a question about out-of-sample testing. Would you consider another correlated market? You could do that, test another market instead of out-of-sample, but still I like to test on the market I'm doing. And I think we have time for like one or two more questions. Adam's asking, how would you analyze it after walk forward? I recommend you go and look at some of my other Big Mike webinars, because that's kind of beyond what we're doing here. And Steve asks, am I running strategies on a VPS? I personally am not, but a lot of people do. And Sam, who runs Speedy Trading Servers, one of the contest sponsors, he has a pretty good service in case you're looking for that. But there's pros and cons to that. I just tend not to. So with that, I know there's some questions I just didn't get a chance to answer, and unfortunately my time is limited today, so I apologize for that. But if you send me an email with your questions, or better yet, just post them on the Battle of the Bot thread or in the webinar thread, I will gladly answer them tonight. But I've got a son who's testing, I think, for a belt in Taekwondo today, so I got to go and video it and do the dad thing. So anyhow, let's move on to the book giveaway. I want to thank Wiley Finance, who's the publisher of my book, for donating these copies. Wiley is the premier financial investment trading book publisher. So take a look at what they have to provide, and again, thanks to them. Okay, whoops. So what we'll do is we're going to go with the second person who answers the following question correctly. So just type it in the chat box, or the question. Well, let's see. Why don't we do it in the question box? Keep it consistent. Second person to give a correct answer will get the book, and Mike will coordinate that. So let's get to the first question. Okay, what is one thing in common for all 3 contest-winning bot developers? So we're just looking for one thing here. And it looks like Peter F. was the second winner. And the answer we were looking for, there's a few different things. Simple, a lot of people mention that. built around an idea, include sample testing, and that it's hard to make good bots. So congratulations, Peter F. Was the first winner. And if you don't hear from Mike or send him a message, you can always email me, and we'll definitely get you your autographed copy of your book. All right, so question 2. And this will go to the third correct answer. Okay? The tension builds as I fumble with changing the slides. Question 2 is, it's a true or false question. So, whoops, all bots should be based on high-frequency scalping. True or false? Okay. Maybe I should have asked for the first person to answer true and get it wrong. Oh, somebody did, but it looks like Carlos Arroyo. Looks like he was the third correct answer. So, of course, the answer is false. A lot of people think that the bots should be just high-frequency scalpers. I'll tell you what, guys, as a retail trader, I'm a retail trader, you guys are all retail traders, don't do it. Don't try to make a high-frequency scalping bot. You're just going to fail, because even if you had good logic, things like NinjaTrader and TradeStation, those kind of platforms just are not built for high-frequency scalping. One, the test results, the back test results you get will be wrong. 2, the speed just isn't there. You really need to have co-located computers. A lot of times what some of these people do is they just dedicate a computer and burn the code onto a chip so run faster. So play where you can win. And I don't think high-frequency scalping is where any of us can win. We don't have millions of dollars for infrastructure or for PhDs. I think you want to stay away from it. I have the most success running on daily bars, swing systems. Though I do more of that. And granted, it has drawbacks. You have probably bigger drawdowns. You might be in losing trades longer, but I play where I think I can win, and that's the key with this kind of thing. So Rob's just saying, hey, what's scalping? Well, I'm just saying 10 to 50 trades a day where you're going for 1 or 2 ticks of profit and you have a 1 or 2 tick stop. That's probably a good scalping. And you can expand it, and maybe it's a point, but the idea is you're churning, you're doing it pretty quickly. And retail traders, they love them. They love scalping systems. I like the concept of it. It just doesn't work, though. And I guess you'll just have to take my word for that. Anytime I've ever tried it, it's never worked out well. Okay, the third question coming up, it's going to be the 5th correct person. And here it is. What is one way not to create a bot? So let's look for, okay. Wow, you guys are quick with the answers. So, so 1, 2, 3, 4, 5. Peter Lewecki. I hope I pronounced your name right. So another Peter. This is a different Peter who won. And his answer was to optimize. Yeah, I mean, you can do some optimization. That's okay with the bot, but what you don't want to do is do this over-optimizing. You also don't want to do where you do no testing at all. I don't think you want to do thousands of rules. There's a million different ways to do things wrong when you're creating these things. It's amazing. And most of the time you won't even know you're doing something wrong until you go real money. And the market has a way of figuring out that, hey, you're doing things wrong.
Hey, Peter Lewicki, I need you to type in your BMT username. I got everybody else's, but I don't have yours.
Okay, so that kind of wraps it up. And again, I apologize if I did not get to your question, but feel free to post it in the thread, or if it's a private question, just email me. I'm really good at answering people. So, and with that, I'll turn it back over to Big Mike, and fill out the survey. Please fill out that survey, and then we can create something kind of neat. It'll kind of be a group creation, and hope maybe even come up with something that is halfway profitable.
Okay. All right. Thank you very much, Kevin. I know you have to run. I appreciate your time today. I'll post the recording of the webinar sometime tomorrow on YouTube. Check the Battle of the Bots thread for the YouTube link. There's also the link to the survey in there. So please, everyone, there's hundreds of people that browse the Battle of the Bots thread at any given day. So I would like to see hundreds of responses. So guys, please take a few minutes and fill out the survey. It's only 5 questions. All the bots are in the thread. And you can go to post number 2. It's the quick summary. It's updated pretty regularly, and you will see some information on the bots that are running and that have run in the past. All right, guys. Thanks, Kevin. Thanks, guys.
Bye.
All right, bye.